It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to talk about taxes for the next hour. And we hope that you'll give us a call, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. And I'm joined in the studio with Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. So today... by the way, we still have one class left, right? That's still going to be available to sign up for?
Yeah, we have our Saturday class starting in a couple weeks. And we also have our online class. So there's a lot of options for you to learn taxes your way, in your pajamas or out with other people.
Come to the office in your pajamas.
Yeah, well, I'm sure some people may, but... You never know, but you're welcome. All people are welcome.
You can sign up online still. Go to egtax.com, and we have a Saturday class and an online class still available.
Correct.
Well, we hope they do that.
Yes.
And we're going to talk about today the importance of understanding the difference between a deduction and a credit, and what some of these credits are, and how you qualify, and maybe how you can make yourself qualify by doing something, and you still have the rest of October, November, and December, right?
That's right. Not a lot of time, but there's still time. You can still make changes.
So what's the difference between a deduction and a credit?
Well, a deduction saves you what tax bracket you're in. So if you're in the 12%,
10%.
Yep, you save 10%. If you're in the 20%, you save 20% of that deduction. So if it's $2,000 deduction, it's either $200 or $400 deduction. But a credit is $1.
So the true saving is the deduction multiplied by your tax bracket.
Yep.
Right?
Yes.
But on a credit, that's not true, is it?
No, it's dollar for dollar. And it depends on the type of credit. That could be refundable or non-refundable. So it could be up. You got to make sure you have tax liability to get the credits.
Well, in some of them. But if you have a refundable credit, it means you didn't have to pay anything in and you can get a big refund. And a lot of people don't realize that. And if you have children or qualified individual, qualified relative that live with you, and you don't have any wages, you no way could get the earned income credit. But if you became self-employed or got a job before the end of the year, you might qualify for the earned income credit, which is like money they're going to give you that you didn't pay in for.
Right. It's a negative income tax. So they give you money when you don't have to pay anything in. It's amazing how it works.
Right. So the earned income credit this year goes from $649 if you're single with no children and you have wages, up to $8,046. And the state of New York kicks in an additional 30%. So if you had 3 kids and your income was like $16,000 from wages, and you didn't have disqualified investment income, you would get refunds of money you did not pay in of $10,459. To me, that's a lot of money.
Oh my gosh! I was just going. I remember when it was like $2,850 was the maximum.
Yep. So the important thing is you have to have a qualified child or qualified relative. In other words, it could be your actually not child, but maybe your niece or nephew that you're maintaining a household, up to 3 children, and you have wages. And this credit goes up to you can have wages up to $67,000 and still qualify for a partial earned income credit. And on the state of New York, they do 30% of the federal.
Yep.
So it's all of this money.
Yeah. Yeah. And if it is your niece, your nephew, make sure you have legal custody of the child. It just can't be the person, your cousin. Oh,
in other words, you
sister.
Can't be sitting home with your sister and say, "Oh, you're not working. I'll claim the kid."
Right.
It doesn't work like that. The child actually has to live in your home.
Correct. Yes.
And it has to be your legally placed foster child, grandchild, et cetera, right?
Right. And how they check it is the Social Security numbers, because they'll look to see last year, where was little Susie? Why was Susie claimed with Bobby? And now this year they're with somebody else. And
right.
And the year before they do double check like that. So
But now here's the thing. Let's say that a couple of years ago, let's say that the child was living with you, but the dad or mom said, "I want to claim the child," and they didn't qualify for the earned income credit because the child didn't live with them. The child was living with you. You can actually go back and amend that return, pay back the money that you got, and get the earned income credit for this year, right? In other words, you have 3 years to straighten out any tax problem.
correct. Yes.
Right. So really, really important. These, and that is a refundable credit. In other words, you didn't have to pay anything in. And if this is your situation, you're going to get the $10,459 refund on the federal and the state.
Yep.
I mean, pretty sweet. Pretty sweet. All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so moving along to other refundable tax credits. Another refundable tax credit would be the additional child tax credit. And how does that work? So this is over and above the earned income credit, right, Chris?
Right. It's the child tax credit is for children under 17 in your house, and it's for 2025. It's now up to $2,200 per child, and if you don't have enough tax to use all the child tax credit, they flip it from a non-refundable credit to the refundable credit, where you can get up to an extra $1,700 in your refund per child.
So that's over and above the $10,459.
Right. So if you have 3 kids, you got the maximum EIC. Not only are you getting the $10,000, you're going to get an extra $5,100.
$1,100.
Yeah. So now you're looking at a $15,000 refund for making $12,000.
That's the state of New York is going to do something too, right?
Exactly. Yeah.
So
I mean,
you think about, and this is what drives me crazy. These are not deductions. This is money you're getting. So when you see these commercials at tax time where somebody says, you qualify for the earned income credit and we'll give you your refund fast, that's because people that qualify many times are lower income people who really need this money, and it ends up to be a great windfall for them. Now, the question is, if I have a $15,000 refund, how much of it's taxable to me next year?
0.
That's true. All right. So I'm Esther Golias, the tax lady from EG Tax. Give us a call, 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back with your calls, your texts on the other side. Hey, to us, you are family. We got to 2.5 months. Is it right? 2.5 months till January?
Yeah, but we'll say 3. Come on, let's not push it.
I'll tell you. But here's the thing. Until December 31st, there are things that you can do to affect your 2025 return. And so not only do we want you to know what's out there. But number two, we want to help you to affect getting extra money back. The other thing I think people miss is if you're a senior without a child and your income is lower, you can still get the earned income credit as well, right, Chris?
Right. Yep. Yeah, well, yeah, up to age 65, they got rid of the bonus the bonus EIC they had for 2 years for seniors who were still working over 65. But yeah, if you're up to 65, no children, and you have very limited income, you will get a small EIC
from
wages or self-employment.
Right.
Yep.
Right, and so that can be up to the 600 and
49.
Let's see, I got it. Yeah, $649. So, everybody's all excited about that inflation credit they're going to get from New York State. This is also a credit on the federal they're going to send you, and the state of New York pitches in too, right?
That's right. It's yeah. I mean, because just like somebody with children, they get a federal and a New York State EIC. Somebody without children could still get a federal and New York State EIC check.
But you have to have either self-employment income or wages.
Correct.
And so Christmas time is the perfect time to get that part-time job.
Yep.
And what better employee could there be than somebody that's approaching 65?
Right. Yeah, they got a good work ethic. They, and they want to work. And so, yeah, why, definitely.
Okay. We're going to go to, and again, 30930. 8030930, star 930 on a cell phone. Text us at 716-8030930. We have Nancy. Hi, Nancy.
Hi.
How can we help you?
Well, I have a question. My grandson had a child with a woman who passed away last year, and she claimed the child on her taxes and wasn't supposed to. And he found out when he did his taxes that had happened. Is there a way for him to go back and recoup that unearned credit?
How did the child live with him or with her?
The child lives with him, and he had full custody.
All right. So, yes, you can go back and amend that return. They're going to, unfortunately, with the government shut down right now, they're really not answering the phones, but they will in the next couple of weeks as soon as they come to an agreement here. But he would file an amended return. Now, the year before that, did she claim him?
No, he did.
Okay. So,
and she passed away, so I didn't no payback.
Documents. He has court documents that says that the child is his. Yeah. So, yeah, we can absolutely amend the return and get him his money back from 2023 to 2024 if she claimed him again, and 2025, obviously.
Right.
Okay. All right. Thank you.
You're welcome. And that happens all the time, doesn't it, Chris?
Oh, my gosh. Yes. I mean, we see it a lot where children claim themselves because they're in college and they don't talk to their parents, so they file the return claiming themselves. They don't realize what they cost their parents by doing that. But, yeah, with parents who don't live together, who have children, oh, my gosh, that happens all the time. The fight over the dependency and, I'm the first to the kitty. I'm going to get the money, not you,
Which is true, and they will get the money, but the person who's living within the law can file a corrected return, amended return, or the original return, claiming the child, and, of course, they would ultimately win. Now, it doesn't mean that it's fun having to answer all those documents and proving the fact that you were the custodial parent. But obviously the person who really proves it is going to win, and they'll adjust it on the person that shouldn't have claimed it.
Correct. Yeah. I mean, with Nancy, with her grandson, it's going to have to go paper because her great-grandchild was already claimed. So then it's going to take 8 to 12 months, but he will get the extra money. So definitely worth it.
I think it's her grandchild.
Okay. Well, yeah, maybe it was the birth of her grandchild.
You're making Nancy older than
I know. Well, I was a little like, whoa, wait, okay. But you never know.
Right. All right, we got a text too, right?
Right. And this is a big topic right now. Just a quick question. Is the check from Kathy Hochul taxable?
Is it taxable, Chris?
No, it's not.
No, it's not.
It's a bonus that's tax-free. And again, they're based off your 2023 tax return. You had to file a 23 return. And you can get up to $200 if you're single, up to $400 if you're married joint. So they don't care how many kids you have. It just goes by your filing status.
Right. And if you didn't have to file, you want to make sure you get that 2023 return in so they'll know who to send the money to.
By Wednesday. Yeah. And if you...
Oh, that's true.
Yep.
That makes it even more... you got to really put the pedal to the metal.
Yep. And if you moved, you have to go online, create an account with the New York State Department of Taxation, and change your address. Because these are paper checks. They're not direct deposit. And when the government, whether it's the federal or New York State, mail a check and you no longer live there, the check doesn't get forwarded to your new address. It gets bounced back to the government. So,
which means you'll have to contact them, prove that you mailed, moved, and everything. So the important thing is, if you haven't put in that change of address, make sure you put the change of address in so that they don't send the check to the wrong address and it bounces back to New York State.
Right.
Right?
Yep.
Okay.
Yes.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we're talking taxes and credits, and the difference between a credit and a deduction is night and day. So, like, for instance, one of the changes this year under the big beautiful bill is that seniors are going to can get up to $6,000 for being over 64 or over, and they have income under $75,000 if they're single, $150,000 if they're filing a joint return, $12,000 if they're filing a joint, up to $12,000 if they're filing a joint return, but that's a deduction.
Right. Yep.
So it may sound good to think $12,000, but if you're in the 10% tax bracket, it's only going to save you $1,200.
Oh, only. I'll take $1,200. I'm sure most.
But it's not like a $12,000 credit.
Exactly.
It would be $12,000. Right?
Exactly. You know, I got a caller this week, and it was pretty. You know, they asked what it looks like for their taxes for this year, so I ran the numbers. I told them, and I said, "Well, I got great news for you. You're actually going to save over $2,000 because your tips are tax-free."
Right.
And, you know, I'm thinking they're going to be so happy and ecstatic. They made it very political and said, "I don't want it." I'm like, okay, well, I wish there was a line on that tax return where I could say they decline
of course,
that.
there is a line.
Yeah, just don't do it.
If you don't fill out that form, you don't take the deduction, and you get to overpay.
Yep.
Right.
Yep.
So you don't have to take advantage of what's out there.
Yes.
I mean, it would seem stupid to me that you don't, but, you know, whatever. Okay. And we got another text here, Chris?
We do. Hey, Esther, I've been doing my taxes on one of your competitors' website, and I'm wondering if I'm missing out on money by doing it that way.
Well, you know, like we can't tell until we look at your tax return. And when you come in, we don't shame you. We don't have like this big thing that goes, "Oh, they use H&R Block's website." Oh, you know, we keep it quiet. We're blessed that you came in. We're going to look at it. There's no charge for us to look at it. It was interesting because I was just talking to Grace, Christopher's daughter, who's a CPA, and she said, and she calls me Nini because I'm her grandmother, and she says, "You know, Nini, everybody that does it themselves does it all wrong." And that's what happens, because when they ask a question, if you don't even understand what they're asking, you know, what do they say? Garbage in, garbage out?
Yep. Yep.
So am I saying that you did it wrong? Not necessarily. The only way we can tell if you didn't take advantage of everything you could have is to come on in. We'll be happy to look at it for you, and we don't charge.
Yeah, and the thing is too, I again had it's been really busy this week because extension deadline, which again, those people who file extensions.
Oh my gosh, we got to mention that too, right?
Yeah, you have till Wednesday to get it in on time if you filed that extension. But these people had questions. They're a do-it-yourselfer, and ends up the wife had 2 little small businesses. And I'm like, why aren't you writing off your expenses? You do crafts and you do this. And she was like, well, somebody told me that I'm not allowed to do it. I'm like, oh, okay, well, be my guest and pay an extra $2,000 in taxes because of the self-employment tax and income tax.
Right.
No, you are definitely allowed to do that. So.
And it, maybe initially when somebody heard that she was crafting, they said, well, is it a hobby? And she might have said, oh, I would craft no matter what. But then it ends up being a really great business, and she's making money. Well, at that point in time, if it moves from a hobby to a for-profit business in your mind, your intent,
Yep.
then it becomes deductible.
Right.
And if you don't take the deductions, guess who overpays?
You do. Yep.
Right. So, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. I know we have texts and phone calls, but we're going to take a short break for the news. We'll be back with you guys on the other side of the break. Hey, to us, you are family. We try to make you feel like you're right at home, and we want to help. So I'm joined in studio here this week. Tiffany is kind of off, which is cool. And we're answering your questions, 8030930, 8030930, star 930 on a cell phone. 716-8030930 is our text line. If you miss signing up for our tax school, we still have a Saturday class that's open and an online class, so you can go to class in your pajamas, like Chris always says. But we're talking today about credits and how important a credit is versus a deduction. Not that deductions aren't good. Deductions are good, but they're multiplied by your tax bracket. But a credit is 100% of the amount of the credit. And so it's unbelievable. I know we have other people waiting, but I wanted to go right now into the American Opportunity Tax Credit because part of that is also refundable. So we have the earned income credit that's refundable, federal and state. We have the additional child tax credit, which is refundable, federal, and there's something like that on New York State. And now we have the American Opportunity Tax Credit for the first 4 years of higher education, right? And part of that is fully refundable.
Right. Yeah. I mean, it's the college programs out there are amazing. The credits for the federal, for the state, you got to know about it and make sure you get the information from your children. How many times have you done a tax return where you asked the parents, do you got the 1098T? What's that?
Here's the thing. Don't you think it's a problem? The schools send it out to the kid.
Yep.
Hello. Yep. Is that dumb or what?
Oh, yes.
So the kid is over there with their computer doing their own tax return, which is completely against the family. And the family doesn't even know about the 1098T. And so the family overpays by at least the $1,000 if it's refundable, right?
Yep. Yeah.
So think about it. So on the federal, the refundable portion of the American Opportunity Tax Credit is $1,000, but there's also another component that can be up to $1,500, right?
Right. Yep.
Or $2,500.
Yeah, in New York State could be $200 to $400 to higher, depending if you use it as an itemized deduction. So, I mean, you could be really giving up over $3,000 by not.
Right. And the thing is, they're not going to call Johnny, your son or daughter, Johnny could be a girl's name too, and say, we really think your mom and dad should have claimed this, right?
Right.
They're just going to let you. They're just going to let you skip down the lane, knowing that you overpaid your taxes. Now, from a family standpoint, it's like $3,000 they're entitled to. What was the most that Johnny could have gotten if he did it wrong?
Basically, depending on his income, the most we've seen is zero.
Right. Well, or
the money from New York State.
And they get the 1,000.
Right.
So the family be entitled to $2,000. Well, the last 3 years that'd be $6,000.
Right. That's How many rides back and forth or flights back home for Johnny would that be?
Right. So think about it. So if you had the earned income credit, federal, state, the additional child tax credit, the American Opportunity Tax Credit, federal and state, you'd be looking at a refund of $16,959 on money you never paid in.
Yep.
And what's so remarkable to me is, what a stir this inflation check has done, right? The $200. But people will leave $17,000 on the table and not even think about it because it sounds so confusing. But it's not confusing to us.
Right. Yes. Yeah. You gotta know what you're doing in order to get it done right.
Right. Okay. Speaking of that, why don't we go to our first caller? How can we help you?
Hey, Jim.
Hi. I got a question. I have a Dodge van, 2015, I used to use for work, and I no longer need it for that purpose. Can I donate that, take a tax deduction if I give it to the Tunnel to Towers group?
All right. So, Chris, you want to give him the answer?
Yeah. So if you're donating it, it's not when you actually turn the car over you get the deduction. It's what they do with it, which determines when and how much of a deduction you get. If they auction it off, you have to wait to claim it as an itemized deduction once they sell it in auction, because they will let you know. They'll say, hey, Jim, thanks, for your car. We were able to sell it in auction for $3,000. So then you get a $3,000 write-off. If they were
provided his basis was $3,000. If this was fully written off, does that change the answer?
Oh, yeah.
Because it sounds like he was using it for business.
Yes, I was.
Were you depreciating it? Or just taking...
No, I didn't. I didn't know about that.
Well, one thing with depreciation, it's allowed or allowable. So even if you didn't know about it, it still adjusts the basis. So you have a basis adjustment on there. Now, it's entirely possible that it was 50% for business and you only wrote off half, which would mean that your basis might be equal to what you'd be able to take as a charitable deduction if you can itemize. So, I think what I'd suggest you do is give us a jingle so we can look at all of your stuff, and we'll tell you what your adjusted basis is and how much you could take as a itemized deduction.
Yeah, okay, because I have two vans, and this one, because of my business, I'm not going to tell you what it is, but, you eyeballing certain things in it, and, so I only used it for business.
Yeah, were you writing off the mileage, or were you... Okay.
I would write off the mileage every case I had.
And so it's entirely possible that he could still have a substantial basis left.
Correct.
But to make it real simple, what you paid for it less the fair market, as a fair market value, because of the depreciation, it has to all be adjusted. So, what is taxes ever easy? Not really. So, anyway, but give us a jingle. We'll be happy to help you.
Well, that's why I go to you, Esther, because you are the best.
Oh, you're so sweet. Thank you so much.
Yes. You're welcome.
I'm Esther Goliath, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And you can text us at 716-8030930. And we got another call, right?
We do. We got Paul from Hamburg.
Hey, Paul.
Hi. How are you?
I am marvelous. Except that I know Monday's coming up. Aside from that, it's everything else is good.
My question for you is...
I can't. If you listen to this show, it makes me crazy the bills are playing on Monday. But okay, Paul, what can we help you with?
I have a substantial loss. I had a fire, and my personal belongings was $500,000 in the house, and I only had $250,000 coverage. Now, can I take that loss on my income taxes?
So let's see, I have it correctly. So you had a fire, and it was not covered by insurance very much at all, correct?
Well, the personal wasn't covered to $500,000 because that's what the insurance company told me I had, and they only covered $250,000, so I lost $250,000 worth of stuff.
Okay. Well, under the change in the present tax law, unless it's a federally declared disaster area, you cannot take a casualty loss on your tax return. So unfortunately, there's nothing going to be deductible for you.
All right. Well, thank you. I appreciate that.
Okay. Wow. That was taken
I'm
like
sorry,
a man.
Paul. That's, yeah.
Yes, thank you, Paul. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. That, most everything that they've done under the tax law has been so good for regular people. This seems unfair to me.
Oh my gosh, when they did that, yeah, it was big change for people because I always use a fire as an example, and look at here it is actually happened, and he's unfortunately not allowed to use it.
Yeah, it's just a horrible thing. So unless it's a federally declared disaster area, and I think New York State now said New York State declared disaster area, you're not allowed to take a loss on a casualty on your tax return.
Yep.
So that's that. All right, we got a text too.
We do. I think I misunderstood you. I'm single, a senior, who does not itemize. What will my total deduction be from my gross income? Thank you.
Okay, so you're going to get your standard deduction, which is around $17,000, and you're going to get an extra $2,000 because you're single. They did say single, right?
Correct.
So now they're up to 19. And if your income's under $75,000, you're going to get another 6. So your standard deduction with different iterations, but it's going to be about $25,000. That's going to be deductible.
Yes. Yeah. So he'll be very happy this year.
Right. Now, here's the thing. Let's say the income that you took out of your IRA was $10,000 and the rest is your Social Security, but you got other income in your IRA. Think of taking money out of your IRA because it'll be tax-free. Empty out that IRA if you do it systematically. People are doing these rollovers from their traditional to their Roth. This way, you don't have to do the rollover. You can just take the money out tax-free and put it into investments or whatever you want to do with it. Or you could put it into a Roth if you wanted to. You could roll it over. But the thing is, don't do it ill-advised. Give us a call. We'll tell you exactly how much you can do in that rollover so that you can take it out of a traditional and roll it into a Roth using the $6,000 if you're single deduction filing a joint return.
Right.
It'd be a shame to miss out on that deduction. Right?
Oh, yeah. Oh, yes. People always... Yeah, let us run the numbers for you, and we can let you know exactly how much you have room for and not affect your taxes.
Right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. One last thing, as far as refundable credits, the premium tax credit is going to expire this year unless they never go back to work in Congress. But right now, the premium tax credit looks like it's going to be dead in 2025. So if you overpaid your health insurance based upon your income and the benefit that the federal government was giving you, that's money that you get back. That's refundable. And the fuel tax credit. If you happen to be a farmer and you're buying gasoline and you're paying highway use tax, you get that money back too. So, all right. Should we take the text, Chris, or should we do it on the other side?
Let's take our final break.
All right. So I'm Esther Gillius, the tax lady. We're going to take a short break. Be on the other side with your comments and questions. And Chris, all those
Yes.
things that song says, that I throw my hands in the air, I kick my heels up, I do all those things. But I'm not watching the game. And you laugh because you know it's true, right?
Yes, yes, yes. Oh,
Yeah,
yes.
Anyway. Oh, praise God. Lord, I just pray that the Bills would win on Monday. Oh, I shouldn't do that. Right?
Well,
Okay. I forgot to also mention under a refundable tax credits, if you adopt a child this year, up to $17,280 per child qualifies for a credit, but of that, $5,000 is refundable.
wow.
So you think about this: the $16,959 now gets up to like $22,000.
Yep.
I mean, so it's wonderful that somebody now there is income restrictions, $259,190 in order to qualify for the refundable portion of the
Adoption credit.
Adoption credit. So, okay, and we have another call.
We got some texts. The high efficiency water heater credit is $600. That is good through 12/31/25, correct?
That's correct, but then it dies.
Yes.
So that's correct.
Yeah, it's got to be installed and paid for by 12/31, not just ordered. It's got to be installed and paid for. The same thing goes
Right.
through for furnaces, windows, doors.
I'm going to tell you, it's chilly out. 32 degrees, chilly, frost on the pumpkins and all that stuff. Think about it. These credits are up to $3,200, non-refundable, but they're credits. And so you've got to make sure that they're the highest efficiency, SEER-rated, Energy Star appliances, et cetera, but it's dead after December 31st. So you want to make sure you do it.
Right. Yep.
Okay, and what else we got, Chris?
What is the deduction for a married couple?
Okay, so it's $15,000 a piece, or $30,000 plus $1,600 for being over 65. So that's $3,200 plus the $30,000. So that's $33,200 plus, if your income's under the $150,000, another $12,000. So your standard deduction is going to be $45,200.
Yeah, if you're over 65.
That's a mamma mia.
Yeah.
That's a mamma mia. So if you got money in a IRA that's going to be taxable someplace, and you think, well, I'm not going to take it out now because I don't want to do my RMD. It's your money. If you're not paying taxes, take out some of that right now because you're not going to pay taxes on it, and you're going to reduce the amount that has to come out in your RMD later on. It's just called good tax planning.
Yes.
Right?
Definitely. Yeah. I mean, how many times do we say, call us before you do anything? So we can.
Please. Because we don't want you to, because once the deed is done, we can't undo the deed.
Right. Yep. I mean, you hear the commercials for Ruscullo, for exchanges all the time. But once you sell your house and you take the cash, it's too late to do a 1031.
Yep.
I mean, that's just an example of
Yep.
don't ask us after.
Absolutely.
Yep.
Okay. We got any other phone calls? 803-0930, 803-0930, star 930 on the cell phone. Text us at 716-803-0930. All right. So we just talked about refundable refundable tax credits, where in our situation where we even had the adoption credit, they're getting a refund of $25,000 that they didn't pay in. Now, obviously, I got to tweak the numbers because it really sounds good, but hopefully it makes your ears perk up, because there are so many ways that you can modify what's happening on your tax return before the end of the year, and that's what we're talking about. But then there's non-refundable credits too, where that's where you're money in your 401k and your IRA that would become taxable becomes part of the equation, because maybe you want to take it out and use these non-refundable credits to cover that, right?
Yes, definitely. I mean, like, if you're a senior and, you bought an EV car and, and you go by, the salesman, oh, you got this credit of $7,500. But if your income, your tax, between your pensions and your Social Security, after your new big standard deduction is only $6,000, that means your tax is $600. You're only getting a $600 credit for that car, not a $7,500 credit.
However, if you went down to the credit union or wherever you got your IRA and you say, I'd like another $15,000 taken out, because of that $7,500 credit, that's going to cover the $15,000 you're taking out of your IRA. And that's using your brain, because now that $15,000 has been taxed, and it's not going to pass on to your heirs, and you're not going to pay taxes again, and it won't be part of your RMD. And if you don't understand what we're saying, please call us, right?
Right.
Because I hardly understand what I'm saying. Not true. I understand what I was saying. All right. So non-refundable credits, the child tax credit up to $2,200, of which $1,700 could be a refundable credit, but the other $500 is a non-refundable credit, right?
Right.
So,
right.
But it still means you get the credit.
Yeah, and the child tax credit for a married couple cuts off at $400,000. So they do give you a lot of income to make, and you still get the child tax credit.
Right. And then the lifetime learning credit. So that's not like the American Opportunity Tax Credit. This is lifetime learning. So throughout your learning history in your life, 20% of the amount that you're paying for continuing higher education, up to $10,000 or $2,000, is non-refundable. But again, if you didn't have any taxable income, you want to get the taxable income from withdrawing from taxable sources. And that means that $2,000 credit would cover the liability.
Right. Yep.
Right?
Yes.
And then there's the pension savers credit, which is really gigantic. It's over $60,000 this year. So they are saying, what a good person, Esther, you're putting money into your pension plan. We're going to give you a tax credit. Again, not refundable, but something that'll which will cover the taxes on income. And again, you want to make sure that you utilize that to, take the money out of your taxable events so that you can not pay taxes, right?
Right. But, I mean, the retirement savings credit / pension savers credit, I mean, I've seen it, you work it up. Hey, say you put $1,000 in your IRA, your refund, because you get the deduction and then you get this credit, your refund goes up $600. That means you really only have to come up with $400 out of that $1,000 that you're putting in there, because the government's giving you the other $600.
Right. So in other words, you got to put the $1,000 in, but they're going to give you back $600, and so really the true cost was only $400, and you got a bank account showing you got $1,000 in there.
Yep.
Right.
Yep. Yeah.
How sweet it is. Okay, then the other thing is we were talking about residential energy credit, which is all going to die as far as on December 31st. So go get those doors, windows, furnace, hot water tank, insulation, EV credits. Well, EV credits are dead now, right?
Well, yeah, if you bought the car by September 30th, you still get the credit. If you bought it now in October, I'm sorry.
Too bad, yeah. So those credits are still available up to $3,200. Child independent care credit. This is so interesting to me. Child independent care credit, this is when you pay the daycare provider to watch your kids. And the daycare provider said, well, I don't care if you get a credit for watching on your tax return. I'm not giving you my Social Security number. And people go, oh, well, somehow Lucy doesn't have to pay taxes on watching my child. That is terrible, because you're going to work and you're going to pay taxes on your money. Why doesn't Lucy have to pay taxes on her money?
Right, and you end up paying Lucy's taxes because you can't deduct it. She's not claiming it, So you
Right.
get stuck paying tax on money that you don't have anymore.
Absolutely. I dropped little pamphlets on her doorstep that say IRS fraud. Now, in the state of New York, that's a refundable credit, right?
Right.
So on the federal, it's non-refundable, but on New York State, it's refundable.
Yes. Yes.
Okay, and then we talked about the adoption credit. We talked about the EV credit. On New York State...
Right. Do you want to do the text real fast? I know.
Oh, yeah, please.
Okay. Hi, I'm retired over 75. Did I hear you correctly that no Social Security will be taxed this year?
No, you never heard that from me. You heard that from Donald Trump.
Yes.
Not from me. I have to tell you, I know he likes to say, he embellishes things, right? And there's going to be no tax on tips, and there's going to be no tax on overtime, and there's going to be no tax on Social Security. Not true. If you have more than $12,500 in tips, and you're single, $25,000 filing a joint return. If you have more than $25,000 in overtime, the first group is going to be tax free, but the rest of it's going to be taxable. And all they're doing to cut your Social Security this year is the $6,000 credit for single, $12,000 filing a joint return, provided your income on the joint return is under $150,000, $75,000 if you're single.
Right.
So no,
Yep.
I never said that.
Yeah. Yep. So.
Right.
Yes, correct.
Okay, really quick. So on the state of New York, there's all these credits as well. The earned income credit, 30% of the federal, the Empire State Child Tax Credit, $330 per child, the new $1,000 per child credit for children under the age of 3, the college tuition credit, the real property tax credit, the child and dependent care credit, the non-custodial earned income credit. If you would have been able to do the EIC, but the kid lives with the parents. Volunteer fireman's credit, the real property tax credit, $229. So those are things that are refundable in the state of New York, and that'll save you money too. And don't overlook New York State. They have some real sweet deals out there. And if you need help, and don't forget the IT 258, the bed tax credit.
Right. Yeah, so if you're
Until next week, I'm Esther Goulias, the tax lady. Extension deadline on Wednesday. We'll get you going. We'll get you all set. Until next week, with Christopher Fabian. Have a great week. Go Bills. Oh, bye.